My name's obviously Tui. I'm the CEO and founder of Jaaims. We're an automated AI investing app, pretty much to what Jaaims introduced us. I thought before we sort of jump into Jaaims, I think it's really important that we obviously understand the transformation of technology in the financial services sector. And because obviously we're a trading app, I'll probably more relate what we've seen, the advancements in technology and how it's actually transformed the share trading finance sector. So a brief history, obviously, where we've come from is that the first exchange was in the 1600s, Dutch East India Company. We then saw the transition to obviously the London Stock Exchange, the first dedicated marketplace to trade stocks. And then that was basically more that traditional way that we're seeing on the trading floor, a bit similar to what you see at the New York Stock Exchange. But in 1970s is when we really started to see the influence of technology into markets. And that was driven by NASDAQ. So they were the first electronic trading using automated networks of computers. And that really enabled us to not have to be on the trading floor to make trades, where trades could be done obviously in the office. And that was obviously the really early stages of internet and the influence of internet in markets. And then we saw that 1980s come along. We moved to broadening out electronic fund trading and trading to where we are today, 2020, where there's an assortment of securities that you can trade, obviously from options, commodities, currencies, through to stocks. But the key thing you can see here over the last 400 years is that technology has really been the catalyst for that change in the sector. And I think for the everyday investor or the everyday people like us, we haven't really seen that technology ourselves until probably about 1990s when the internet really came into our lives, and we really started in what we call Web 1. I'm sure you guys would remember dial-up when you'd have to obviously dial into the internet, and that was very early days of a visualization of the internet. Netscape, we were very early in emailing, and obviously we had computers to see Web 1. But then we started seeing the transition to Web 2, which is where we're sort of now, but I'll sort of talk further about that. And that's when we really started to see social networks and engaging peer-to-peer online. And obviously that unleashed social networks. So obviously we probably started with MSN Messenger, Friendster, but probably the one that everybody knows is Facebook. And Facebook was really the innovator of that time of driving what Web 2.0 is today. And then that obviously moved into what we call the peer-to-peer economy, Airbnb, Uber. And now we're sort of on the cusp of Web 3, which obviously what Jaaims talked about earlier, about decentralization, but AI-driven services. And we're sort of in that middle now, where Web 3 is starting to become part of our lives. Obviously, Bitcoin is the key that you think of Web 3.0, but we've really expanded a lot further outside of Bitcoin. So decentralized networks, it's not about having centralization. So obviously Web 2, everything was driven by centralization. So you'd have your servers. Back in the day, you probably had them located in your office, but then we obviously transitioned to these big cloud networks by the major players like AWS, XETRA. But that's all centralized. But what we're seeing now is that we're moving to Web 3, which is this decentralized. And it's probably important when I speak to people is that don't think of decentralized as currency. Don't think of decentralized as meme coins like you've heard, like Dogecoin, etc. They're obviously part of that, but decentralization is a much deeper change, and we're only just on the cusp of that. And obviously AI is supporting that transition. So you're going to see this big transition now that for our experiences online to be smarter. And what will drive that is AI. But what Jaaims is, we are the first AI investing app for retail and wholesale investors. And we were probably the first to use AI a bit differently to how everybody sort of thinks that you use AI. So just sort of touching quick background on Jaaims. We're obviously an AI investing application. What we do is we analyse a bit over 1,000 stocks from the US, Australia, UK and Europe. And we derive buy and sell recommendations. But how we do that is done through our AI technology. And so what we've tried to do is we've tried to, in our industry, you do have what we call equity analysts, equity strategists, and they will analyse stocks on a valuation basis or fundamental basis, even technicals. And what we've done is we've trained our AI to think like an analyst. So and this is where sort of the education piece comes through, because when people sort of see our technology, they think, oh, algorithm. So a complex mathematical equation that drives alpha. And then obviously with those static algorithms, you generally lose your trading edge. That's what Jaaims is about. What we're about is we actually use AI to study and understand each individual stock. But with the power of AI and the technology we have, we can analyze stocks very, very quickly. And often you'll see our tagline is like having 1,000 analysts in your pocket. And it really is, because we actually analyze stocks every 15 minutes. So as part of this with the AI, we use AI in two ways as part of that recommendation process of the app. And the first one is that we understand sentiment in the market in real time. And so what we do is we have about 250 different news feeds. We have feeds with social media, and essentially we collect from the internet everything that's being spoken about a particular stock. And then we aggregate that data and then we send it through our AI. And what we do is we determine sentiment, so real-time sentiment on a particular stock. We then overlay that sentiment and we benchmark that against their peers, how that sector is, even that market and economic geopolitical events. And then we're able to generate what that sentiment is for that stock. And the second way we do is that we use AI and machine learning logic to track historic movements of that stock, and we collate that all together to derive our recommendations. So this technology, obviously I'm explaining it, it's probably sounding a bit complex, but what we do, the best way to look at it, as I said before, is that it's like having an analyst analyze your stock, not an algorithm analyze your stock.
Recently started delving into crypto just because it seems to be the thing to do at the moment. She said, hi Tui, are you looking at offering crypto trading services?
So we're in the investigation process. We will be doing something around crypto next year. We're working with ASIC at the moment to sort of understand how we can incorporate that into Jaaims, but it is definitely something that we're looking at for next year.
Is there a potential issue of how volatile each of the coins seem to be?
No, I'm not too worried about volatility. So with Jaaims, we aren't a broker, so we have to connect with the broker. So we work with Saxo Markets, Interactive Brokers, CMC Markets. So our ability to offer crypto will probably rely on those companies having adequate supply of cryptocurrencies. Now, obviously the brokers are sort of going through understanding this change as well. And a lot of it's OTC, over the counter sort of products. So they're not trading 24/7 like crypto does. So we've got these challenges that we've got to look at with the broker that, if the markets are closing at 5 o'clock and then opening on Monday, but you're not trading, we don't have access to those changes. So it's more the accessibility side that we're looking at. The second way is that we are sort of doing some investigation work at the actual current exchanges, so like Coinbase and how they work. But I don't know if anyone's sort of traded crypto. You don't just deposit money into an account and then you can just draw down that money. You essentially have to buy a stable coin and then buy a crypto. And if you've got excess cash, you put in a stable coin. So there's essentially all these sort of challenges that we've got to look at as a company. And then the second part is that obviously our technology is built for stocks. and it's really especially the undervalued valuation side. So we're confident in our AI and how we measure sentiment in the market, but we also have to do some work, obviously, on the fundamental side of crypto, because as we know, cryptos are very emotional, they're very volatile as well. So we've really got to understand the effects of fundamentals versus sentiment in the market.
Absolutely. Now, just to add an extra James into the loop here, I'm asking you the question from a James about James. This is going to be very fun. James Butler says, James seems to be a very interesting platform. Can you talk about the exact way artificial intelligence works and the accuracy of its predictions?
So I suppose that we can only go by our own results. So our smart portfolio, which is really our market leading platform portfolio, that is where the AI actually picks the stocks for you and determines when to enter and when to sell. So we generally have a high success rate on that, circa above 60. And then we have our sort of standard product, which runs at about 45% success rate. So that sort of gives you an indication of the two success rates and how accurate it is. But what we found is we've purposely built our algorithms like that as well. So the starter and the freemium algorithm is what we call, it's really peaky. So what we found is customers like lots of entries and exits, and then to obviously get the big upside ones. So people have put more risk and actually have more trades opening. And the results when the AI gets it right is sometimes we can have circa 30-40% increase in the matter of 19 days. And where that algorithm really excels is earnings period, or announcing, obviously when companies announce their earnings every half year, that is when that algorithm absolutely excels, because it's jumping in before the announcements when the sentiment's high, and then obviously getting the upside, which is, if it's a good earnings report, it can sometimes jump 10 to 15%. The smart portfolio algorithm, though, that runs a lot higher, is more for your long-term investors. So we actually have a lot of self-managed super funds and sort of wholesale investors who use that platform, and that one's about long-term consistent returns. So the last 12 months, we did return 26%. However, our benchmark target for that is 10%. So, and the reason why that one is really popular is that what the AI is very good is at protecting downside, which is what a lot of investors want, especially self-managed super funds. They want to know that their equity is protected when the market falls. But when the market is obviously trending or going up really quickly, our technology is never ahead of the market. So you always find that we're always a couple percentage behind what the market is doing, but that's a really good mix for that algorithm.
How credible are the ESG risk rating scores provided by James? Can you talk about the criterion or the process that James uses to calculate such scores?
No problem. So we use Sustainalytics to access our ESG data. So that's a firm out of New Zealand. They use their internal process to obviously understand ESG. I can tell you there's probably 5 or 6 main providers in the industry. Are these providers all getting it right? I don't think so, to be honest. I think they all have different approaches to it. And I think because ESG's sort of just really come into our lives a lot the last 12 months, I think people have different interpretations of if that company is meeting ESG or not. Sustainalytics, through our research, we feel was probably the best that we found locally. And we use that obviously to identify ESG risk sectors such as coal. Are they trading in nuclear weapons, animal testing and things like that? They also have a really good scoring system where they score social governance, economic governance, things like that. But what we really liked about it, there's a field in our app called ESG performance, and it gives it a rating: underperformance, average performance, and overperformance. And what we liked about that is that it benchmarks that performance of that company against its peers in the market. So we actually think that is more reliable indicator of how companies are performing in the ESG, because if you're in minerals, right, and mining, of course you're going to have a low, well, compared to everyone else in in the market, but to be able to compare it against the peers in that sector gives you more of an understanding of how they're meeting the ESG requirements, and what their peers are doing.
And look, thank you so much for taking the time to answer all those questions. I know we had quite a few and a very interesting presentation. So Tui, thank you so much.
No problem.